Welcome to Supernatural Stocks on Moneyweb with your host, the Finance Ghost. This is your weekly fix of equity analysis designed for stock pickers. Whether local or international, you can expect a mix of news and my ideas about what I'm seeing in the markets. In the recent trading update from Woolworths that deals with the 52 weeks to the 29th of June 2025, we find a retail group that posted comparable store growth in their fashion, beauty and home segment of 5.1%. Not amazing, but not bad. But within that, it's actually beauty that is living up to its name, with a stunning 14.7% growth rate. Now that is rather interesting. Then, if you look at the Foschini Group's trading update for the 13 weeks to 28 June 2025, we find an even more impressive performance. Within TFG Africa's growth of 5.2%, pretty similar actually to Woolworths, the beauty category was up by a whopping 24.5%. It now contributes 3.2% of TFG Africa's sales, up from 2.7% in the prior period. The Foschini Group notes in their management commentary that they achieved further market share gains in line with the group's strategy in the beauty business. Again, that's rather interesting. Beauty is clearly more than just in the eye of the beholder. It's big business, with fashion retailers fighting to get a bigger slice of the pie. It's not just in the listed space, of course, as you may have noticed that Edgar's has evolved under the ownership of Retailability towards smaller format stores that include a dedicated fragrance and cosmetics offering. This means that in relative terms, far more of Edgar's trading space than before is dedicated to beauty. But why? Retail is all about optimization. To understand why beauty is an appealing category for retailers, we need to understand the levers that retailers pull in order to achieve better financial performance. The first one is easy: gross margin. The rule of thumb in retail is that more discretionary categories have higher gross margin, while staples carry a lower gross margin. Simply, retailers make more from selling cosmetics and fragrances than they do from selling you bread and milk, per rand of sales at least. And best of all, those cosmetics have a very long shelf life in comparison to food. But then why don't grocery stores just put in a beauty aisle? Well, more on that to come. In the apparel context, like Woolworths and the Foschini Group, the margin mix effect is less pronounced. Full price clothing sales do tend to carry a gross margin of around 60%, with end of season sales to clear stock, bringing that margin down into the 50s and often the 40s on a blended basis if the retailer was overstocked for a particular season. Now this means that on products like shampoo, for example, sales won't be margin accretive versus clothing because again, within the health and beauty context, shampoo is a relative basic. But on cosmetics, margins can be better than the overall mix in the clothing business. This is one of the reasons why in an apparel store, you're not really going to find shampoo, but you will find upmarket lipstick and perfume. Now, you may be tempted to say that this is just common sense, right? Nobody is going to buy shampoo at their favorite local clothing store. But then why do people buy small appliances at Clicks? And why have grocery retailers tried so hard to build out health and beauty sections that feel like you've just stepped out of a grocery store and into a Clicks or a Dis-Chem, even though you've only walked a few meters? Believe me, if retailers could get consumers to always behave in a way that maximizes margin, they would. Sometimes they get it right, like with Clicks' aforementioned very clever and highly lucrative positioning in small appliances, a very margin accretive part of their business. It's not logical at all that you would buy a toaster or an air fryer where you also get your monthly medication, yet here we are. For grocery stores, they are very unlikely to persuade you to add expensive fragrances to your trolley with bread and milk, but they can at least get you to buy shampoo. And believe me, they will try hard. In larger stores where they have space to fill, you'll be sure to find some cosmetics offerings. If there's a general merchandise section trying to sell you a TV on a whim, I assure you that fragrances aren't far behind, never mind shampoo. But it's a difficult game, as beauty and fragrances tend to require a completely different store format that has better lighting, lower shelves, and merchandising that requires plenty of attention to detail with expensive items, rather than just packing boxes of fruit on a shelf. This is why it's difficult for grocers to really tap into the beauty category. It's exactly why Clicks was able to grow into the giant that it is today, with Dis-Chem fighting hard for market share in that space. Now, having demonstrated that basically everyone would sell cosmetics and fragrances if they could practically get it right, We now go back to clothing retailers where this is actually happening. The store formats lend themselves well to beauty, as everything in a clothing store is about how you look and how it makes you feel. Beauty is a natural fit. But if it's not always margin accretive in clothing retail in terms of gross margin, then what is the appeal? This brings us neatly to trading density, the route to maximizing operating margin. Imagine that you own a retail store and that there are two different products you could choose to sell. They carry identical gross margins. What would be your next consideration in deciding which one to stock? Would the space that they take up perhaps play a role? Trading density is a critical metric in retail. It measures sales per square meter. Rental is charged per square meter as well, so the combination of higher trading density and lucrative gross margin is the holy grail in retail, because that's how you maximize operating margin after you've deducted your expenses like rent. Now, imagine a clothing rack, along with all of the different sizes and colors that you need to stock. To have a full assortment, you really do need a lot of space. In cosmetics, you can achieve a similar level of choice in a much smaller space. Although the range needs to be kept fresh, there's no world in which cosmetics become obsolete as quickly as fashionable clothing. Even leaving aside personal tastes, the weather ensures that clothing retailers need to clear their range each season. This creates far more variability in margin and sales for clothing, whereas a beauty range is a lot more predictable. This is precisely why Edgar's can get away with downsized stores that focus on pushing sales in cosmetics and fragrances, rather than having additional clothing racks that tend to run at much lower trading densities. Here's another good reason why clothing retailers love beauty. They can use it to reinforce their brand positioning. If you're buying premium clothing, then seeing it alongside equally premium beauty products is sensible. It would be dilutive to your shopping experience if cheap lipstick was next to an expensive dress, wouldn't it? Similarly, you can't really sell high-end beauty products if you display them next to basic t-shirts and socks. For Woolworths, where the premium positioning of the overall group is key to fending off competitors and getting their margins up, beauty is a logical place to focus. It's good to see them finding success in that category, as the fashion, beauty and home business does need a boost. At the Foschini Group, which has a wide range of store banners from middle income to higher income models, beauty is an area where they actually need to win. As a final proof of how the beauty range needs to be coherent with the clothing strategy at these retailers, Mr. Price has a beauty offering that is focused on being affordable, and they do it through a private label brand, which means an in-house brand where they have control over how it looks and what it costs. Typical of a value retail strategy. It just makes a lot of sense in the context of their broader offering. Beauty, like most retail categories, is a battleground of competition. But unlike many other categories, it's a battle that is well worth winning, which is why you see clothing retailers fighting it out against your typical pharmacy-led retailers like Clicks and Dis-Chem, and certainly your grocery stores to the greatest extent possible. Just visit one of those Checkers Fresh X stores or one of the big hypermarkets and see for yourself how much effort gets put into a lovely health and beauty section. Analyzing retail is about understanding all the underlying product categories that roll up into the final set of numbers. There's no such thing as an opportunity without risk, and these are merely my opinions on the stocks covered herein. Make sure that you do your own research, form your own views on the market when doing anything in your portfolio. Nothing in supernatural stocks should be taken as advice.